What is up again, guys? I'm back again with another one, and in this video I'll be talking about Fibonacci. How do you use this tool, or how do you add it to the tools that you use for technical analysis in your trading when trading the financial market, whether it's crypto or forex or synthetic indices, just like this one that I trade. So the concept behind the Fibonacci is that this Fibonacci is giving us where or likely the market is likely to reverse from or to continue from. And based on Fibonacci, is helping us to see that whenever a market moves, you have a leg, there's going to be a correction. And where is that correction likely going to end? That's where the concept of Fibonacci comes in. So you have your trend line in a place, sometimes maybe the first touch of the trend line. But how do you know the second touch of the trend line? Well, sometimes you can use your support and resistance zone. But one thing that can add to it, if you cannot find a support and resistance zone or a supply and demand zone, is the use of Fibonacci to know your second touch of the trend line. Now, I'll be bringing out my trend line. This market has been reversing. So where is probably this market is going to? Maybe the market got here at a time. The market got here. This market got here. Is now making its correction. How do you know where this market is going to stop its correction? Maybe you've indicated that this market is now going to move in a downtrend. You can draw out your Fibonacci just like I've drawn it out here and look at the premium zones or can zone, which is the 61.8 and the 50 range. If there is a rejection from that zone or that place, then you should expect that the market is going to reverse from there. What happened? The market actually did, which gave us a continuation of a sell setup, which gave us the market condition. And look at what happened again. The market even reversed again, came back into that 50 and 61.8. But actually, we have to elongate what? Our swing point, because our next swing point now is from here to here, which is what I will do right now. So we have our next swing point, which is from here to here. And what happened? As you can see, even though the market even went way up more than I expected out of this zone, we can see that the market did not even close with what? Did not close with a body above this 50 and 61.8. It closed with what? A wick. The two candles that closed above here, that went above or beyond this 50 and 61.8 zone, they closed with what? With a wick, giving us a reason that this market is going to continue its trend down to the downside. And what happened? The market did. So using a Fibonacci in your trading analysis will help you to identify how you can find reversal points in the market to help you to continue with a trending market. And note, you have to use this in a trending market. Now, looking at the scenario here, the market actually went a little bit. The two candles, this green candle went above this 61.8, closing with a body. But what happened? We can find another confirmation that this market is continuing its downtrend, giving us a bearish engulfing candle, to confirm that this market is going to what? Is going to sell. And look at what happened. This market what? Sold drastically. So right now in this market, we are seeing that this market, when it got here, because this market has been trending down, it went up into this Fibonacci retracement. And what happened? The market reversed a little bit, but because the market has changed its what? The market has changed its trend from a downtrend to an uptrend. We are now finding the reason why this market is now going what? Is now moving up. So that's the reason why this market is going up right now. So this is how to use your Fibonacci as a tool. You have to focus mainly on the 100% retracement, the 0% retracement, the 50%, and also the 61%. Those are the zones that you should focus your Fibonacci to in, and that's the reason why I've give my Fibonacci this place, this only these four values, because on a normal level the default values we have 38 point something and also 23.7, I guess, but I use these only ones because those are the place that I find my reversal patterns from the market, and those are the place I focus on mainly whenever I want to trade. So whenever you are trading, let's say the market's reversed just like it did actually from here. I'm sorry, my apologies. Let's say the market actually was trending down, and you actually drew your Fibonacci actually, which is from here. So now let's say the market's reversed from here, you find your confirmation probably in this zone. How do you know where to take your first profit? Your first profit will be taken out where at the 0% retracement, because that's where the likely the market is definitely going to get to, is definitely going to make at least, if not a lower low, which is meant to come down, is definitely going to make an equal low, and equal low is definitely our 0% retracement, and that is what happened. As you can see, this market even went down, though it struggled a little bit, but it was able to get to what? 0% retracement. So this could have been your first take profit, and your second take profit could have been at the minus 0.27 retracement. Actually, I do not have that here, but I used to have it before, and I'm going to add it back again. But me personally, I just like to use sometimes within the range of 0.23 to 0.27% retrace, 0.23 to 0.27 retracement as my second take profit. And if we find our second take profit, we can see that the market got there. So this is how you trade the market, using just the Fibonacci tool to find your take profit, and yes, to find your basically your take profit in the market, the financial market. So using the trend line, the support and resistance, or the supply and demand zone, and using your Fibonacci, all these things, whenever you use them, they help you to, wherever they combine together to give you a confluence. Those places are places that you should not take lightly whenever you analyze the market and you want to take an entry on a trade. You should not take that place lightly, because that place is your kill zone, and I will explain that later in the future. Those places are your kill zone, and you should not hesitate to take your entries from those places. So till next time, I really appreciate everyone. Kindly share, subscribe, and if you like the video, kindly like it and also subscribe. So next time we continue from where we stop, and I will be talking in my next video basically on how to do our top-down analysis, and which is going to involve our multi-time frame analysis. So it's like going to be a two-in-one, and I'm going to be using one of the instruments that I trade to analyze or to do the top-down analysis, which is how I analyze the market to take my entries. So till next time, peace out. Kindly like, again, share and subscribe. Till next time.